Hey guys and girls, welcome to the London session recap for Euro Dollar on Tuesday the 14th of November 2023. So daily chart, we know we are bearish. We are currently in the swing pullback phase and we are simply looking to follow the daily bullish internal structure to facilitate that deeper daily swing pullback where we can potentially look at targeting these levels and see where price reacts from. But ultimately, once we get that bearish IBOS, that's when we'll have that strong confirmation that the pullback is then over if the swing trend is going to remain bearish, right? And then we can target these lows. But until then, just for these intraday trades, we're looking to follow this internal order flow up to these more premium level of prices. Of course, we have this nice daily zone down here, but price may just be coming off these sell to buy wick demand. But we can see that a lot more clearly on the trusty 4-hour chart when we jump down there. Obviously here, the swing structure has been bullish since the start of October to play that daily swing pullback, right? That is the objective of the 4-hour swing structure. So because we haven't, this level here, we're not coming off that significant level of daily supply. That gives us very, good reason to believe that there is cause for higher prices for at least another bullish leg up to this daily supply zone, right? Just trying to build the evidence, build a portfolio of different confluences. That's a pretty good bullish confluence for price to eventually make its way up higher. But zooming into the more recent price action, the 4-hour is technically in that sort of swing pullback phase where we've come into this level of demand, right? So it's a kind of larger demand range that flipped this level of supply, directly led to the break of structure. So there's a decent probability that price could just mitigate this and go. So we have to be very aware of that. Cause for lower prices is that there's more refined demand below. We're only in the premium of the range. But as we know, price does not need to pull back down to here in order to form that higher low. So what are other things that we can then look for as early signals that potentially price isn't going to pull back down to here and actually it's pulled back far enough and it's going to go? Well, obviously the simple thing we look for is just look for that shift in structure, which we initially got back on Wednesday, but then since then, what did we do? We kind of just started sweeping highs and lows, and it all got a little bit choppy, and we were just stuck within this range. So this for me is not the type of price action I'm super keen on trading, because it can be very easy to take quick losses or just risk to reward not really being on your side for big enough moves to kind of capitalize on. So it's not great. So really, I was kind of patiently waiting for price to either break out of this range or to push, say, deeper into this 4-hour zone and then get a nice bearish IBOS on the M15. So then at least if I then take the short, I'm trading in line with the immediate M15 order flow, that M15 internal structure, and have a bit more confirmation to look just for a quick in and out move. And likewise, if price comes down to the bottom of this range, if I can trade in line with M15 internal, then I'll consider that. Yesterday on Monday, it only if I quickly show you the M15 instead of just talking about it, we did start to form that larger, clearer, bullish internal structure, right? We spoke about this in the meetup. Then we came into this strong internal low, and you potentially could have caught a move here. I think there was one loss, maybe 2 losses on the M1. I think there was 1 win on the M5. But the trade idea was, right, to basically follow this internal structure to see if there's going to be another move or potentially higher, right? The 4-hour pullback is over. So that's not a session I'm trading at the moment. So London, there was nothing. New York, there was a position. And then we got another bullish IBOS here, okay? So I'll go back to the 4-hour chart in a minute because there's a point I want to make about that. But coming into today's session, just play this forward a little bit. It's nearer Frankfurt Open. And then put my phone on Do Not Disturb. There we go. At this point, what do we want to do? Well, price is not immediately anywhere we want to get involved, right? Because for longs, if we want to follow that internal structure and or just play longs in the bottom of this range, really this is the only POI that makes sense to me, because this is our current internal range. So we'd look for price to come back down to here and then look to see if we can get that next leg to the upside. For shorts, yes, we've had the IBOS, so we're expecting that pullback, and we've had a bearish M15 chock, but since then nothing's happened, right? During the end of New York, we came into supply zone and we're just moving sideways. So these highs have not achieved anything. They have not broken this low. This low has not achieved anything because it hasn't broken the high. So basically between this leg, we are just ranging around. This is all weak structure. Do not ever look to get involved within this. 99.9% of the time, this is just not what we're looking to do. This is just building that Asian range liquidity, and I'm either waiting for those lows to get taken into our level of demand here, then we can look for a quick long if you want to take that, or if you want to look for the shorts, then at a minimum wait for that liquidation into this level, Not my favorite POI, as I talked about in the meetup yesterday, right? Because we've got all of this kind of corrective highs behind it. Not kind of a big fan of zones when they form like that, right? I want my zone to form kind of like this, right? Clear, pivot, it's at the bottom of that level. It's obvious. Whereas these zones, price can often kind of just trickle through them, and then it kind of just does that. So not a massive fan of aggressively just jumping into my lower time frame straight away, but of course you can do it. It's valid. It's a pivot that led to the breaker structure with a lot of momentum. We've built up that nice liquidity. So yeah, just to keep it simple, if you're looking for shorts, that's fine. Wait for these weak highs to go, then you can look for the short in here. Now, if price is like this and you jump into the short, well, let me play it forward a little bit, where we kind of start to get that. You have to realize that what are shorts here in terms of phases? Well, it's pro swing, because the swing is bearish, but a short is counter to the internal structure because the internal structure is clearly bullish. So phase Bs are definitely not my favorite because you're trading against the internal structure, but it's fine. The area in which we want to do it is at the top of the range, right? Refer to your cheat sheet for this, the MTF phases cheat sheet. It's in the Photon Strategy course module. This is the sort of the area that makes sense to start to think about phase B because it's at the top of the range. But if you're going to do it, you want there to be enough risk to reward into the demand range because at this moment, we don't have confirmation that that's the end of the swing pullback. Really, all the objective we can assume at this point is just to play an internal pullback back to this level, and then that can continue. So you want to make sure if you're going to trade that you're getting in almost straight away in the lower time frame, and you have enough risk to reward to either remove your risk or take profits. Okay. And ideally as well, you get like at least a LM15 chock just to at least get the fractal order flow on your side. That would be ideal, right? Don't have to get that, but that would be nice to have. Otherwise, keep it simple and just wait for the bearish IBOS. Then you've got the internal structure on your side, right? Because then you can short from a strong high, and that's essentially really what I was waiting for. So as we can see, we didn't pull back to that demand zone at session open. We just pushed up a little bit higher. So yeah, if you did want to trade these sort of more aggressive setups, let's have a look to see what formed in the POI. So obviously we need to wait for our POI to be mitigated. That's step one. Okay, POI mitigation, our alert goes off. Do we have a strong liquidation at this point? Well, this line here is those M15 highs to the left. So potentially that can be our M15 lid, right, into our POI. But what do we need to identify? We need to see if there is an active PBL. Well, here is the M1 PBL, right? That's the demand that led to this high being liquidated. Prices then come back into that PBL, and then the PBL is held and it's done its job, right? It's caused a clear higher high with the candle body closure. So that is now done. I can no longer use that M15 lid, right, if I was interested in that position. So now what that means, if you want to trade from this POI and you use the liquidity entry models, you now need to wait for a strong liquidation to form here in the M1 price action. So now we get an M1 change of character, at least on this data feed. I believe it was by 0.1 pips. So it's not the most convincing of breaks. So then you have to ask yourself, well, if that low is broken by 0.1 pips and we're on the M1 time frame, how much liquidity has been induced to go behind this high, right? How strong of a high is this? And that's kind of the question you have to ask yourself a little bit. So if you are 100% mechanical and a 0.1 pip break, like a chock, meets your rules, then okay, it's valid. I'm just asking you to ask the question to yourself, whether or not you may want to consider that, in your trade plan, a fake break needs to be like maybe more than 0.3 pips, just to give you an idea of like how you could implement a mechanical rule where you want to maybe increase the significance of the liquidation. Okay, you don't have to do that. I'm just trying to, advise you on how to come up with potential solutions to potentially increase the strike rate of positions. Or you may be someone who just wants to use a little bit of discretion and be like, I'm willing to be a bit more aggressive as long as it meets the minimum criteria, as long as I like the overall trade idea, right? That's just things of how you may want to think about it. So now we've had the liquidation of those highs. This is the demand that has caused the break. You could be, technically a little bit more refined and really go, that was that kind of last sell to buy. It's up to you how you want to do it, or just read between the lines a little bit. Either way, you're going to need to see structure shift in your favor anyway. So that will clear up any doubt or hesitation around that. So now we clearly get right, the PBL break, and whichever way you wanted to draw it there. We've had the shift in structure, convincing shift, right? Nice clear candle body closure below, nice V-shaped reaction. We also had sort of mini equal highs here as well, which can add to the confluence. So in terms of the M1 entry model, it's not bad, right? It definitely ticks all the boxes there in terms of the entry model on its own. Regarding the probability, right, of the M15 POI and the M15 trade idea itself, that I'm not a massive fan of personally, okay? But here's a potential trade you could take. So this is the phase B trade. You're playing the M15 pullback. So whether you want to enter on the edge of the zone or you want to potentially try and improve your risk reward a little bit, you could enter on the 25%. Okay, that is up to you. And then I wouldn't really swing for the fences on this one. Probably around 3R as a maximum. So you need to take into account commissions too, and that would be you into the trade. Now, if you want to manage this quite aggressively and you use trail to break even method, obviously that's the first break of that low, then you could look to trail at this point. That'll kind of be the first point that makes sense. And again, whether you want to trail your stop loss bang on break even, or whether you want to give it a little bit of room and just trail it behind, you know, this M1 strong high that broke the low, just to give it a bit of breathing space. Again, that's up to you and how you want to approach that. So price pulls back. If you trail bang on break even, you'd be out. If you trail behind the strong high, you'd still be in the trade. Push down a little bit lower, and then we start to run quite nicely. So let's keep an eye on the M15 here, right? Don't just maybe sit in a lower time frame. So again, you can hopefully very clearly see the trade idea here. Really, we're just playing the pullback into this demand. Now we've got a very kind of tiny M15 candle down here, but obviously price action isn't always going to come all the way down. So I'd be wary of definitely of that sell to buy, and you even have to be wary of that range in terms of your management. That price could just tap this and go if the momentum is strong, but that's what I'd be looking at. Now, technically, if I drag this across, I don't believe, what's the high of this candle here? It is 063, and the close of this candle here is 063. Yeah, so technically it hasn't closed above the high. So, this, we cannot say yet that we have the strong internal low yet. It's still down here because we haven't had that kind of body break. But that doesn't mean that necessarily this low is definitely going to be targeted. This can hold. Okay, and at the moment you're just looking to follow order flow back into here, and that can go. So the point I'm trying to make here is be aggressive with your management. Don't just swing for the fences. I mean, you can do that, but I would just say, be wary that the probability of this low breaking is lower when we're in a range bound environment, and with the 4-hour being bullish, coming off 4-hour demand. I'll talk about that a bit more at the end of this recap. So yeah, hopefully you guys can see, you just want to be a bit more aggressive with your management, and or potentially look for longs from this demand if you are that aggressive trader for a potential hedge against this position. So yeah, might be break even, might still be in it if your stop loss was behind here. So let's play this forward. Price would have come out. So if you still had your stop loss there, you would have been stopped out for around half-hour loss. Let's say if your stop loss was a bit tight and you left it open, then it would have been a loss. Maybe 3 pip stop if you rounded it up. You may have been lucky to ride that out, right? So it's fine areas of margin here, unfortunately. So you want to try and be mechanical with your management as possible so that you do the same thing long term. Now, let me just bring this back a little bit on the time frame. And let's talk about the longs if you wanted to trade this. So again, not viewing this as a high probable position. One, it's a bit more range bound. We're buying in the premium of the range, right? If we want to trade this POI, we're coming off M15 supply within the 4-hour supply. This low here, these lows have failed so far to cause a candle body break of the high. This could be the liquidation of these highs into here, V-shaped reaction to then go lower. There's a lot of doubt and hesitation as to why I'd be super keen to take a long from here. But, and actually, this is when we can talk about the 4-hour chart. And I said this in the markup, like, what's the main lesson I'm kind of taking from sort of this scenario price action? Really, it's kind of being aggressively following what the 4-hour is telling us. And yes, we haven't pulled back to premium and there's unmitigated demand below, but we know that price doesn't have to pull back there. We have mitigated a significant level of demand that flipped the supply, led to the break of structure. We have had a strong liquidation within that 4-hour demand. Right, fake break and the equals, that gets liquidated, and since then we've basically just seen that internal structure hold. We always know that these straight pushes are very often bear traps, so there is some reason in which if you see this, you may want to be more aggressive on the M15 with basically the simple idea that there's a decent chance the pullback could be over and we could be going right. I know it's something I personally struggle with, to kind of trade the market a little bit ugly like that and just follow the overall bias. Like I remember kind of the more obvious ones that imprinted in my mind was back here in June, where we kind of started to shift bullish. We were coming off daily demand. There was good reason to believe we were getting that next daily bullish leg. And like when we would get those initial 4-hour pullbacks, right, like here and here and say here, we weren't pulling all the way down to the nice discount of the range and where the perfect demand zone is. And it's like we're coming into here, you kind of want to start aggressively getting long, even though the M15 might be bearish. Again, here we were starting to form bearish M15 internal, or maybe even swing. But it's like as soon as we kind of come down into this previous demand range, like it's go time, especially if we get sweep the low, just start aggressively kind of being willing to look for longs within here. Again, pull back a little bit. We don't quite hit the demand level that we would love to hit. But as soon as we start to see that internal momentum, go for it, because you're in line with the overall higher time frame. So easier said than done, but just kind of the point I'm trying to make here as to why that may give you confidence to trade against the M15 swing being bearish, because you're kind of trading in line with the 4-hour chart after we got that internal structure. So yeah, just something to think about for sure. So if you wanted to do that, that doesn't make this super high probability, obviously, in my opinion, but it may be why you're willing to be a bit more aggressive and look for longs from here. So how could you trade this POI? Well, one way is we've got the M15 lid. Okay, similar to yesterday's during London, right, where we had this demand here, and then we had the lid here to the left. Covered this in depth in the meetup recording, so please watch that if you want to see that breakdown. So we potentially could look for this, or of course also wait for the lower time frame fake break in the pullback. So let's see what develops, as we first need to wait for the minimum criteria, which is a POI mitigation. So we get that POI mitigation, our alert goes off. We haven't taken the M15 lid to the left. Do we have a fake break? I mean, this low here obviously broke these highs, but the PBL is miles away. It's not really something that's going to be that relevant. This low has not broken any structure in the previous leg, so that is not a strong liquidation. This low did not break any structure, so that's not a strong liquidation. So far, all we have to work with is the M15 lid to the left, which is fine. Next candle, nothing happens. Then we get the break of the low. So we do now have that strong liquidation. Now, in terms of how you want to draw your PBL on this, it's a little bit where you have to read between the lines, in my opinion, because this is obviously where we can see that sort of supply came in that took the low, but it's not technically a supply zone with our rules, because this bearish candle did not close below the low, right? So technically that's what we need. But when you then play price forward and we start to see it shooting up like this is when, if I wanted to trade this, I'm happy to read between the lines. That's clearly where the supply that came in to take out the low. We're starting to push up now. We've got the change of character. Like if you want, you can refine it to this candle here, where we do have that engulf candle. Then you could maybe ask, well, was the PBL mitigated and did it do its job? It gets a little bit more messy, but it didn't actually cause a candle body break of the low. So then either way you want to draw it, for me, it's still valid, right? Clearly where the supply came in, it's taken the low. The market's starting to move in our favor. So if you like the trade idea, this is where you have to trade it, let's say a little bit ugly, and then look to potentially get involved there. So again, not something I was even watching today, because just, I wanted to see the M15 internal switch bearish. Wasn't interested in the longs at this point. But this is how you could trade it if you so wish to do so. So usual things, either enter on the top of the zone. Of course, you can refine it to 25% if you want to improve your risk to reward, but accept the fact you're decreasing the probability of you getting tagged in. So depending on how quick you were, you may have been tagged in here, or you could have followed up to the next POI, and then you would be within the trade, and it end up shooting off towards the end of the session to bring us to wherever we are now. I believe we got an M15 boss. Let's take a look. Yeah, so we've got that break of structure. So now potentially that could be, an even stronger sign that the this becomes our strong low, that the 4-hour swing pullback is over potentially, and we're going to see that next leg. We are coming into CPI, I believe, for New York Open around 1:30 UK time. We are now on GMT, so UTC. So do bear that in mind. That is a high impact news announcement. I would say 95 times out of 100, that's going to cause a pretty high impact, a pretty sizable intraday move. So manage your risk accordingly. So it'll be interesting to see, are we now, have we had enough? Have we had that strong liquidation? Are we now going to see that movement? Or is CPI going to throw a spanner in the works? Perhaps we're just going to keep ranging and take these highs right and do something. We'll just have to see what price action gives us. I'll personally be coming back tomorrow for London. So tricky price action the last day or so. There was a nice sort of M5 long, probably the only real clean trade during New York yesterday to capitalize on that movement. That's just kind of the way I've seen the market. Hope you guys get some value from that. Have a good rest of the week, and I'll see you next one. Cheers, guys.